I met up with a number of wealthy individuals around this area, and the conversations they are having is not the same one you're having. There is money in Nigeria. People are planning big investments in this country. While some people are trying to get second passports and leave the country, some people are planning investments for 20, 30 years that will keep giving them returns in billions and billions of naira.
I would love us to talk as people who are mature. One thing that differentiates poor people from rich people is that poor people swim in emotions. What others say drives them, and they capitalize mostly on rumors, not facts. Poor men are very lazy to find out the truth. Rich men or wealthy men, or you can say influential men, capitalize on facts. They source for information. They analyze data. They analyze market trends and current chains of events before they make their move. And that is why, despite social media rants or agitations by some people, these wealthy men will step into source to invest. Hello beautiful people, welcome to my channel. This is Qinspride.
So, political banters and corruption, one thing you should know is that foreign investors don't take their decision based on social media. They have their facts, they have their figures, they have what they look at, the policies, they look at what the economy is saying, they look at year on year, because what they're looking at is not your sentiment on social media. They're looking at the return on investment. They're looking at the safety of their investment. So if you like, say this government is the most corrupt, and they are seeing it in papers, in the documents, in their research, and in their data, that there is money here. For instance, now, like you're saying, Nigeria is poor, Nigeria is this economy is the worst economy. But foreign direct investments are moving into Nigeria. Unlike what you're saying on social media. I sat on a PwC report that did an analysis. PwC is not a political organization. I sat on the PwC report because of where I work, and they did year on year, 2023, 2024, and 2025, and I was shocked at what has happened to the economy of Nigeria and the FDIs that have moved into Nigeria. So you can rant on social media, you can discredit the government, but when FDIs are coming in, when foreign investors are coming in, they are looking at the numbers, not your rants. Thank you.
In recent times, more investors are trooping into Nigeria than before. Let me explain. Some might be asking questions because of our dollar-naira crash, but the truth is that the crashing of Naira, we can call it the floating of Naira. What you saw is a bold step to reform the economy. So instead of living in the seat of mirage, you needed to let the world know that this is the exact thing that is going on with this currency. Most of the countries whose currency to dollar is stable or looks stable are actually a mirage because they keep servicing dollar and depleting their reserve. So in face value or on paper, their currency is strong, but in reality, their economy is in shambles, and the nation, the citizens of the nations, are the ones bearing the brunt. Things will get ridiculously expensive despite the fake face value of their currency. Let's take Nigeria for an example. As at 3, 4, 5 years ago, when dollar was $1 to 300 naira, you can buy a pint of tomatoes during tomato season for 600 to 700 naira. That's during tomato season. And 600 naira to 700 naira then was $2 to $2.5. Because then $1 equals 300 naira. So 600 naira to 700 naira was actually $2 to $2.5. During the dry season, you can buy it for 1,500 naira per pint, or even 2,000 naira per pint, which was $5 to $7 then. Fast forward to 2026 with the crashing of Naira or the floating of Naira. Now we are in the season of tomato. Tomato, one pint is 2,000 naira in Lagos, on the mainland to be precise. I'm talking about what I do buy. But because of fasting currently, it has increased to 2,500 naira. I know some of you may be shocked, because if you go to some areas, there are places like in the east, maybe getting it at maybe 3,000, 3,500, even here in Lagos. Some places buy 3,000 naira 3,500, but where I stay, I do buy 2,000 naira to 2,500 naira, which is actually $1.5 to $2. During the dry season of tomato, normal markets sell one pint of tomato from 4,000 naira to 7,000 naira per pint, which is $3 to $5. So if you check now and then, you will even realize that things tend to be cheaper now than before if you convert the equivalent to dollars. I hope you understand that. But for us in Nigeria, because we're trading in Naira, it may appear to look expensive. However, you also see that we are also balancing it. A lot of people increase their services. Businessmen and women increase the price of goods and services. Some people are even making it more in business now than before. That's why governments increase the salaries of those in government sectors. Again, I know that most private sectors also increase the salaries of their workers, except few. We expect their staff to call them out. Also, other exorbitant prices stem from greed of the citizens in specific regions. So the robust economy of Nigeria can be felt if you leave and return back to Nigeria.
Foreign portfolio investment into Nigeria has been under pressure for much of the past few years, weighed down by foreign exchange constraints, policy uncertainty, and rising global interest rate. However, recent data suggests a shift may be underway with higher domestic yields, renewed FX market reforms, and signs of improved liquidity in foreign markets. Foreign investors appear to be reassessing their exposure to Africa's largest economy. At the same time, questions remain about the quality and sustainability of these inflows. Are investors returning because they see long-term macroeconomic improvement, or are they simply responding to short-term yield opportunities in a high interest rate environment? And crucially, what would it take to keep this capital in the system rather than seeing another cycle of quick inflows followed by abrupt exits? This morning, we take a closer look at foreign portfolio flows into Nigeria, what the latest numbers reveal about investor confidence and implications for the Naira financial market and the broader economy. And joining us to provide insight and context is Samuel Oyekomi, is a research and insight lead at Nuremberger Financial Group. Good morning, Samuel. Thank you for joining us on Business Morning. So let's go straight into it. What do the most recent foreign portfolio flow number tells us about investor sentiment towards Nigeria right now?
Yeah, I think what we've seen in recent time is that there's been significant improvement in terms of foreign portfolio inflows, either through the equities market or even in the money market. If you look at data from the NGX as of November, the Nigerian equities market has attracted pretty much in inflows about 1.18 trillion as against an outflow of about roughly 1 trillion. And that gives you like a net inflow of 171 billion. Again, if you look at it from a general contribution of foreign portfolio investors in the Nigerian market, is currently controlling about 20.8% of the market. And coming from last year, it was around 15.3%. And at some point, it fell to about 11%. So again, that gives you an indication of increased improvement in terms of what FPIs are seeing in the Nigerian market. And I think a huge part of that is attributed to some of the policies that we've seen in recent time, especially particularly around exchange rate stability. Also in the OMO market too, we've seen a huge a number of participation also. So far this year, CBN data is anything to bank on right now. We've had subscription, not even subscription now, off-pad. General total completed bids at the end of the day of over 33 trillion naira. And even if you assume that 11% of that is contributed by foreign portfolio investors, that's to give you about 3.7 trillion. So a huge amount of inflows in FX have come in, and we've also seen that played in how the external reserves have also improved in recent time, over $45 billion. So I think it's quite interesting seeing that this year so far.
Now, let's look at the analysis. First, we will talk about the cardinal stone outlook. There is an increase in its bets on 65:35 local to global portfolio split in Nigeria's assets, 70:30 ratio, because according to them, despite numerous challenges, Nigeria is showing signs of resilience and opportunity that even the global market currently doesn't have. In the analysis, Nigeria's homegrown reforms are beginning to reshape its economic landscape. The PwC stated that improved macroeconomic stability following 2025 reforms had eased foreign exchange shortages and lowered inflation. Also projected 4.3% GDP growth in 2026.
Effective and sustained economic reforms will definitely boost investments and lead to growth. The ongoing reforms by the administration of President Bola Tinubu in the energy sector are driving investments after years of divestment by international oil companies, IOCs. One instance of this is of oil giant Shell PLC to invest an additional $20 billion alongside its partners, primarily because of the robust and bold leadership of the president. The chief executive of Shell PLC, Wael Sawan, praised President Tinubu's leadership for creating a healthy climate for investment to thrive and restoring investor confidence. At a meeting with the president at the presidential villa in Abuja, Sawan said Shell is deepening and expanding its investment in Nigeria, emphasizing that the country under the Tinubu administration is one of the countries attracting significant investment from global oil companies. Now let's share the story with you.
Oil exploration in Nigeria in 1936, but years down the line, the British oil company struggled with hundreds of onshore oil spills as a result of theft, sabotage, and operational issues leading to costly repairs and high-profile lawsuits. In 2021, Shell had sought to sell its Nigerian oil and gas business, but decided to remain active in Nigeria's offshore sector. 5 years after it made that decision, things have changed, and the British oil major is making bold decisions. This is after its leadership met with President Bola Tinubu. The Chief Executive Officer of Shell PLC, Mr. Wael Sawan, praised President Bola Tinubu's leadership for creating a healthy climate for investment to thrive and restoring investor confidence. At the meeting held at the presidential villa in Abuja, Mr. Sawan said Shell is deepening and expanding its investment in Nigeria, and the company is ready alongside its partners to invest an additional $20 billion because of the robust and bold leadership the Nigerian president has demonstrated. Highlighting Shell's recent investments such as $5 billion in Bonga North, $2 billion in HI, and the gas project to NLLG. Mr. Sawan stated that the corporation is committed to long-term investment in the country, underscoring the stable economic environment.
We have really been in a space where we are very keen to invest in Nigeria, but I would say this has not always been the case. Your leadership, your vision has created an investment climate over the last few years that, I will be very honest with you, has propelled us to invest, in particular also as we compare to other investments around the world. Stability in today's environment will honestly have a premium for corporates, because we are investing not for one administration or 5 or 10 years. We want to invest for 20, 30, 40 years. And in the case of Nigeria, for many, many decades. And therefore, as we look today at opportunities to be able to allocate our capital to multiple different countries, I can tell you, and I'm proud to say, Nigeria stands as one of the ones that is attracting more capital than most.
Thank you very much. President Bola Tinubu, meanwhile, has approved the gazetting of targeted investment-linked incentives to support the proposed Bonga South-West Deep Offshore Oil Project by Shell and its partners. The president also directed the special advisor to the president on energy, Mrs. Oluvehoin, to facilitate the gazette of the incentive in line with Nigeria's existing legal and fiscal frameworks.
Today, I can proudly say that confidence is returning to our investment environment. Hearing from you now, I could guarantee you that when I assumed the responsibility of this office, the pledge I made to people of the country and my background is to ensure transparency, and that's what I'm doing. I like what Shell has done, and your partnership with Vesu and all of that. There's no better time to do it than now.
Now let's look at the equities and fixed income. Now for the equities, the Nigerian stock market surged 31% year to date in dollar terms as at this February 2026, ranking the second globally in dollar returns. As for fixed income, the treasury bills and money market funds offer yields that are between 18% and 26%, providing a significant edge against inflation. Also, there is a flow in technology and real assets. Let's go to the fintech. Nigeria's tech ecosystem is supported by a whopping $617 million IDC program with emerging breakout in edtech and health tech. 257.8 billion naira had been allocated by the government to renewable research and infrastructure. Let's talk about the investment trend. The truth is that people are tired of mirage. People are tired of empty promises with no outlook. Investors are moving away from opportunistic acquisition towards a business diligence approach and focusing on operational resilience and long-term value creation rather than just financial numbers. Is it our large market? The international market actually named Nigeria as the strategic gateway to West Africa. Now, investors are leveraging the AfCFTA, which is the African Continental Free Trade Area, to access the entire continent of over 1.3 billion people through Nigeria. Yes, there are problems. We have security concerns, self-inflation by greedy stakeholders, private sectors, and the greed of citizens as well as other setbacks. Will Nigeria maintain its economic outlook? Next year is election. What happens next? Are we going to maintain the robust economic outlook of this nation, or are we going to falter? I would love us to discuss this. You can tell me your opinion in the comment section.
Timbala,